Hello, everyone, and welcome to this edition of Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today on this beautiful, beautiful week we've had this week. I have my good friend, my good pal on the show here today. He is the one and the only Mr. Al Connickson. Al, how are you doing today?
Once again, feeling pretty darn good, Josh. How
Pretty
about
darn
you?
good. Hey, you're feeling good. I'm looking good. Or maybe is that the other way around?
Well, you keep thinking that. That's fine.
Yeah,
No,
remember last week we
You
talked about
look
Brad
great,
Pitt. We had some
yeah.
comments on that, and they said I do resemble Brad Pitt. But, that's another story for another day. But let's talk about the stock market today. Al, we had another great week in the markets, as always. We had some nice volatility. Earnings season came out. We had some good news, some bad news. Well, but that doesn't matter. What matters is supply and demand in the financial markets, which is Core Strategy. And Online Trading Academy, the sponsor of the show, actually has a core strategy that's designed to teach you to make better investing decisions. Local academies all across the world, specifically right here in Denver, Colorado, Bloomington, Minnesota, and Atlanta, Georgia. So if you're listening to the show in these different locations, we got a great show packed with some good fun here today, maybe some outtakes here and there, and also a couple giveaways, so stay tuned for that. But Al, before we get started, let's hear a recap on this great week, what happened, talk a little bit about earnings. We had PPI numbers come out, I believe CPI as well.
Correct.
What's driving these markets?
Well, there's all sorts of things going on. We still have the Russia-Ukraine war issue that we're dealing with. We have inflation that we're dealing with. We have the knowledge that interest rates are going to be going up. Coronavirus is kind of rearing its head again in some areas. So a lot of things to look at. But this week kicked off earnings season, and that's something we always look towards to kind of get an idea of what's happening. This earnings season will be of really significance, I guess, because it really will reflect what's happened since the invasion and since inflation started to move up so much. So we'll be watching that very carefully. CPI came out the other day, and that was up the most since 1981. That was huge, up 8.5% year over year. And when you kind of sometimes you have to look into these reports to see if there are things that maybe are positive. And there was one thing that was positive. If you take food and energy out, the increase in CPI was a little bit lower than it was in the previous month. So there was some feelings there that maybe we've kind of peaked out. But
should we get some crowd noise for that?
Let's get some crowd noise. But PPI, what is PPI? That's a group of indexes that calculates the average movement in selling prices from producers. If you look at the difference between CPI and PPI, PPI measures the cost from the viewpoint of industries and then that make products, and CPI measures the impact of price for the consumers.
So how does that impact our listeners?
Well, the problem is the PPI really refers to what it's going to cost the producers to make something, and we know that they pass those costs on to the consumer. So it probably means that inflation will be around a little bit longer. What it means with inflation is that you may have to make some changes in the things that you're investing in. What you invested in before may not work as well in an inflationary environment. And I think what we're also going to be seeing, Josh, and we're already seeing it, is when you look at things online, when you look at reports from different sources, when you watch TV, what sells their audiences as far as staying with them? It's drama, it's shock, and you're going to be seeing all sorts of things like that.
Awe.
Yeah, it's shock and awe. So take that with a grain of salt. But here's a couple of them. This is one that Bank of America came out with a note, by the way, and this is the headline here: investors are in for a world of pain in 2022 as inflation-induced recession will spark another correction in the stock market. Bank of America saying after the inflation shock comes the rate shock, which ultimately leads to a recession shock. You've got Deutsche Bank coming out saying that they are projecting now a recession within the next 2 years. Even the Fed, one of the previous, I guess he was president of the New York Fed, and I think I maybe even mentioned this last week, Bill Dudley, he said that one thing is certain: to be effective as far as the Fed will have to inflict more losses on stock and bond investors than it has so far.
So does that mean the Fed is driving this market?
The Fed has been driving this market for some time. And think about it. What has created this spectacular bull market that we have been in has been quantitative easing.
Printing of money.
It's printing of money. It's keeping interest rates at basically at zero, so corporations could borrow basically at zero, and increasing the amount of debt that they have.
What's happening now?
It's quantitative tightening.
There you go.
And we have never gone through a period of this severe, significant quantitative tightening. So, what's going to come out on the end of that, we don't know for sure, except that the Fed knows it has to do something with the bubbles that are out there. Where are the bubbles? They're in the stock market, they're in the bond market, also in the real estate market. But even according to one of the previous Fed presidents, they have to inflict pain on the consumers. So does that mean that everyone's going to go through pain? No, it means that you just have to look for opportunities maybe in different areas. If you are a buy and hold investor, then you're told basically to hold on through these periods and watch your portfolio maybe go into a hole and then have to fight to come out of the hole just to get back where you were not before. Not everybody loses when we go through a correction or a bear market. Somebody is always making money. There's no reason it can't be you if you get the right knowledge and you understand the right strategies to use the right assets in the right market conditions.
You're right. I mean, just a couple things, because I think it's important for our listeners to understand is, you've hit a couple good key points there. The news, TV, you mentioned some internet articles. They're really driving what we call fear and greed in the financial markets, which creates investors to make decisions based off of those emotions. And I kicked off the show here today and mentioned the words or the terminology of supply and demand. That's what's actually driving these markets, and that's how you make smarter investing decisions, is once you understand how supply and demand works in the financial markets, it's placing low-risk, high-reward, high-probability entry points into these markets, not just buying and hoping. And as Al was talking about, if these Goldman Sachs and these J.P. Morgan reports are true and we do see a recession, why just let your accounts go down? There are ways to protect them, which we'll talk about in the third segment. And there's ways to combat inflation, as we'll talk about in the next section. But, Al, we have a lot of listeners that, right here in Atlanta, Georgia, Denver, Colorado, and Bloomington, Minnesota, that are listening to the show right now. They want to learn more. They want to learn how to get in these markets, how to do it the proper way, but also to put that low-risk, high-reward, high-probability entry points in the markets. So I want to give away some investing class tickets right now to callers 1 through 10, so get your phones ready. When you call in right now, you're going to receive two tickets for an investing class to learn about how the markets actually work and how to make better investing decisions. Call 888-682-6466. That's 888-682-6466 right now. When you call right now, ask for the free stock picks. When you get registered for a class, you're going to receive those free stock picks. Coming up next, how to use the right assets to combat that inflation that we're seeing right now. Coming up next. We'll be right back.